In this presentation, we will take a look at other itemized deductions that would be deducted on Schedule A. We're going to be down here in our income tax equation. We're considering the itemized deductions. Remember, the top half of the income tax equation is basically an income statement, starting with revenue or income, minus the Schedule 1 or above the line type of adjustments, or the adjustments for AGI, giving us the AGI, the adjusted gross income. Then we take the greater of the standard deduction or itemized deductions. We here concentrating on those itemized deductions, which we would only be considering if we believe that they're going to be greater than that standard deduction. We're concentrating here on the form 1040, looking at line 9. That's going to be the standard deduction or the itemized deduction. We here concentrating in on the itemized deduction, which would need to be greater than these items on the left for the standard deduction limits. We're going to be focusing in on one specific itemized deduction, that here on the piece of the Schedule A for other itemized deductions. For further information and more research, you can start with the instructions for the Schedule A. We will include them. You can also find them on the IRS website at irs.gov. So other itemized deductions includes gambling losses. Gambling losses include, but aren't limited to, the cost of non-winning bingo, lottery, and raffle tickets, but only to the extent of gambling winnings reported on Schedule 1, Form 1040, line 8. So basically, gambling losses is one of the more common kind of areas or items that would be here in the other deduction. The gambling losses deduction isn't as useful as you might think, however, because it is going to be limited to an itemized deduction, and therefore, if you only have gambling losses and you don't have some other itemized deductions that are going to take you over the standard deduction, then they're typically not going to be very useful unless you have a whole lot of gambling losses that would have to net out against the actual gambling winnings, which is the other thing that limits the types of gambling losses you have, and it's limited to the amount of gambling winnings you have. So if you had gambling winnings, you would typically have to report that in the income section, in Schedule 1 in the income section, and then on the first page of the 1040, and you'd be paying taxes on those. And then you're allowed to deduct the gambling losses on the Schedule A up to the gambling winnings. Now, why would that be? Are they trying to incentivize gambling? Not really. You can kind of think about it as a similar kind of situation as a business income. I mean, if you have income, if you're saying, hey, I got to report the income that I'm reporting on the line 1 and I have to pay taxes on it, don't I get to deduct the expenses that I incurred in order to generate that income? That's the general rule for what a deduction is or an expense is. So this kind of follows in line with that rule. So if you have gambling winnings, obviously you probably had a good amount of gambling losses typically in order to generate those winnings. You went through a whole lot of losses, expenses in order to get the winnings. So that matching out process is kind of consistent with the normal kind of recognition of when an expense would be recognized, but of course it's severely limited because it's on the Schedule A and it's only up to the amount of winnings. You can't basically report a gambling loss in net. The losses can only be reported up to the amount of the revenue that's been reported on the income portion of the tax return. Then we have casualty and theft loss of income producing property from Form 4684, line 32 and 38, or Form 4797, line 18A, federal estate tax on income in respect of a decedent, and a deduction for amortizable bond premiums, for example, a deduction allowed for bond premium carryover, or a deduction for amortizable bond premium on bonds acquired after October 23rd, 1986. Other itemized deductions: an ordinary loss attributable to a contingent payment debt instrument or an inflation index debt instrument, for example, a Treasury inflation protected security. Deduction for repayment of amounts under a claim of right if over $3,000. You could see publication 525 for more details if this applies to you. Certain unrecovered investments in a pension, and impairment-related work expenses of a disabled person. So of these other itemized deductions, the gambling losses is probably the one you're going to have the most questions about.